It's hard to breathe, but that's alright. Hush.
Hey everybody, hope you're all doing well. So I'm going to recap this morning's learning session. Now this is obviously the ZTFX method. It's in the course, it's the second to last section. I'm going to explain it a bit more in depth. It's titled How We Trade, I believe it is. So if you work your way through the course and eventually get onto that video, it's pretty much going to show you this way of trading. Right? It's going to show you the best times to trade it, best day to trade it, and just things to look out for. But I'm going to recap it, and over time when you watch the video it will make sense, and you probably will even learn from this video, like trying to explain it as quick as I can. As always, I'm going to try and not keep it long, so let's jump into it. So this morning we had the Asian session. As you know, we look for the highs and lows, and if price breaks to the upside then we look to sell. If price breaks to the downside we look to buy. We're pretty much doing the opposite of what we're taught to do, right? A lot of people will say, yeah, okay, if price breaks above the Asian high, then it's going to set the directional bias for the day. Now we don't care about what happens on later on in that day. It could come up and then short term back down to this, the Asian low, to this demand zone, for example, and then continue bullish. But what we must understand is that we must catch that momentum within the first few hours of trade in the London session, right? So as you can see, price is closed above and broken above the Asia high, and then obviously that switched us to sell bias. And then we had a break of structure, or break of market structure, and then another break of market structure. So there's two break of structures, and that's confirming the the bearish move. And then we also had price come back respectfully and tap into this supply imbalance, and then obviously entered into new range, new point of interest, tap back into the body of that now very nicely, break of structure, and then we created this. Now this is where obviously it got a bit more interesting, because we were looking to trade around these hours. Because remember, we always want to keep track of time, because at the time of trading this, it was around 8 till half 8. If we go back up here, it's between 7ish, and you'll hear me mention in the course I like trading after 8ish, right? So there's a lot of rules to it, but in terms of looking for an entry, you can see here that price come back up, tap into this order block imbalance, equilibrium very nicely, and then entered into new range. And obviously we're looking for these sells. Now we've done a wick trick in here. Now this is something talked about in a quick tip series that's up and coming, and it should be out this week as well. I'm going to be adding videos to that all the time. So when that's up and running, you'll understand what the wick trick is and just some of the little tips and stuff. But it's pretty much when you look at an order block, and obviously in this case, you can mark it up as a body, you can mark it up as a wick, it doesn't really matter. You can mark it up wherever you want. But when a body of an order block is so huge, and you can't really go down to the lower time frames to refine it, what you can do is just obviously have your order block, or your supply and demand zone, the rectangle zone that we use here, but use it on the wicks. Now obviously this is a rule that only really applies for the smaller time frames, i.e. the 1 minute, simply because we can't really go any lower and refine it. I mean, we can use a seconds time frame, but if you do, it's very choppy, and I don't think price action is very clear to read on the seconds time frame. But yeah, you can do that and refine it that way, but it's best if we just stick to using it on the lower time frames rather than the higher time frames. But yeah, you can use it in the high time frames as well, because there will be a low time frame order block within that wick. Because like I said, price is fractal, so there's always something somewhere. Price reacts to something, it's never random. And yeah, so as you can see, now this is obviously after 8ish, a nice entry, left a nice supply zone here, used the wick trick, and we left an order block here. But as we know, there must be an order block within this, because obviously when it comes to liquidity, we don't really have any liquidity here. We have an imbalance that's partially taken, but we know that every swing point carries liquidity. So when price is ranging like this, right, every swing point is liquidity, so markets will have to come back up and clear the liquidity. So when you see something like this and order block is set there, you're probably looking to sell, and what happens is that price will come back up, violate this supply, and a lot of people will think, okay, well, I'm going to like to buy now, but then it taps into another supply before selling off, and that's pretty much is a violation before mitigation. And that's when you hear me mention the supply demand zone has been violated, blah blah, that's pretty much what's happened here. The supply zone has been violated, and then we have mitigated this previous supply zone. And it doesn't have to be a wick trick, it can be an order block, it could be like it could be like a bullish candle up here, and I'd look to target that order block, but just in this case it happened to be a wick trick. So it doesn't matter if it's a wick trick, order block, or as a full body itself. but in this case price came back up. And yeah, another thing to note as well, as we, obviously this is the high, this is the low, we entered into new ranges, so new low and new high. In terms of break of structure, as you can see, it did not close above the high, so that is not a break of structure. Okay, so that obviously tells us that we are still bearish, so this would be generally a good area to sell from anyway. So if you wanted to sell from this wick trick on this order block, you can. Just make sure your stops above this high to be safer, because there's always that chance of happening. Now, it doesn't mean that you have to necessarily trade it wick tricks all the time, or wait for that violation before mitigation. It doesn't matter. You can just simply, it's more of an awareness, right, of what to happen, and just reading price. Because from here and here to this last point, there's still a big gap. So if you want to enter this open with order block, that's cool. Just make sure your stops above here and you'll be fine, as you can see, right? But yeah, same again here. We came back up. This is our last point in supply, because remember, this is all, we have to understand your ranges: the low, the high, the low, the high, the low. If we're closing above, then yeah, we're going to be bullish, but we're respecting the supply overall, and we are moving to the downside. Again, as you can see here, we just started to create these highs. We tapped into this order block, it was violated. This one got violated as well. We still had a big gap, so I'm not really interested in taking sales from here anyways, because I ideally want to be on the last point in supply. Price then came back up, took out these obviously swing points as well, or order blocks, because a lot of people would draw this up as a supply zone. And you must remember that this is still within this range, because we have our high here and this is our low. So that's what you've got to understand, right? Because anything happening here is minor noise, or just minor structure breaks. So it doesn't matter if price is making higher highs within here, because we are still within this 1 minute high and low. So what price is doing here, it looks like a supply obviously had that expansion to the downside, and obviously we've got this complex pullback, which is just like a sort of compression into our supply zone, I suppose you could say, right? Then obviously this supply zone got violated, and then obviously it's happened to this order block. So that had been your entry. And in terms of managing the trade, this whole time of why I've exited the trade here is simply because we're managing the ranges. Right, we've got this low, got broken, got this low. This is our new high. Remember what the price do? Goes above the high. So obviously that senses that there's a change of direction, and from there we can anticipate higher prices, in which we are seeing. So again, just understand your ranges, because at this point, right, what the price do? It left this range, entered into this range, because obviously price came back down like this. So this is our high, this is our low. So anything in here is minor noise, but as we've broken above here, we close above here, we're anticipating higher prices. Then obviously price has gone again. Let's remove all this. Price has gone again and closed above these highs. So obviously we're pretty bullish now, right? Entered into a new range. This is our high, this is our low. So what we could do now is anticipate those long opportunities all the way from this demand zone, right? And because it's so big, I'm going to target just a last point of supply and just use the wick, right? I don't want to go down to the second time frame to refine it. I'm just going to use the wick because I know that something is in there, right? If price just comes back and pulls into the imbalance, that's okay. We'll just wait for price to leave a range and enter off a new point of interest, right? And that's all we're essentially doing. But yeah, pretty much just understand the structure of the market, because the overall structure of the market on pound yen is bearish. If price was to break below and we're looking for those buys, yes, we can. It does work, but you have to understand that the overall structure isn't there, so there's added risk of buying. But with pound yen, it was pretty bearish, and being able to capitalize on those sell opportunities. But don't worry, I talk much more in depth about it on in my course. Go ahead and check that out. Other than that, just watch this video through and probably learn something in here already. But when it comes to watching the course video on how we trade, it'll make a lot more sense. But from this is the 1 minute time frame, in and out of trades within 2.5 hours, right? And you've made 10% here, 6.77% there. So 16.8%, let's round it up. Obviously it's 16.7%, but it's rounded up to 16.8%. And in the space of 2.5 hours. So 16.8% in 2.5 hours is not bad at all. So you can go on by a day now and just chill. And as we know, 12 o'clock comes, what happened? It's reversed. We're starting to see that change of character, right? Because again, it's just the characteristics of the markets. Right, obviously we want the price to come down to these lows. It may come down later at a different, later price, so we can still hold this demand zone. But this is just an area of attraction for the market to head down into. Because if you go to the hourly, right, you can see here that it's tapped into an hourly order block. So obviously we're pretty bullish now. 12 o'clock kicked in. It makes sense, the New York session people are in now, okay? And yeah, that's pretty much it. Like I said, study the course and get through the videos. Other than that, guys, I'm going to end the video here. Hope you're getting value in this one. And I'm going to record a video for a market update, or just an analysis. I'm not too sure yet. Probably do a video. We'll see where we're at, because we have to upload this one, obviously. But yeah, thanks, guys.